welcome back to the channel. This video I'm going to talk about taxation methods. Why would I talk about this? Well, it's important to know the different methods collecting tax revenue in order to provide societal gains through public funding. This video isn't all-encompassing. However, I will go through the most popular methods that are used through much of the country and much of the world. There are more elaborate taxation methods and more creative taxation methods that we could explore in the future. So, where do we start? Let's start with the definition of taxes. A compulsory contribution to state revenue levied by the government on workers' income and business profits or added to the cost of some goods, services, and transactions. State revenue is then used for public goods and services such as education, infrastructure, public health, police, fire departments, sewage, etc. Basically, without state revenue, all the things that we use every single day that we take for granted would be inoperable and or too expensive to actually use. First taxation method would be no taxes at all. So no taxation method would be for people that believe taxation is theft. Your entire ideology is all reliant on contracts. However,
you need tax revenue to fund the very courts to enforce the contracts they love so much.
So it's almost like taxation is needed. You want to be able to pay for infrastructure, you want to be able to pay for education, you want to be able to pay for subsidies for food that keeps the prices down, you want to be able to pay for subsidies for oil that keeps gas prices down. These people that don't want to pay taxes, they're just selfish assholes. They just don't want their money paying for other people's education. They just want everybody to be fucking stupid like them. No taxation is just smooth-brained morons that don't quite understand how society actually works. This taxation method is not a serious thing. The second taxation method is sales tax. Sales tax varies from state to state. Some states have 0% sales tax. They make up tax revenue in other ways. Some of them will be covered later on in the video. How does sales tax work? So most necessary goods for survival, like food, milk, water, most clothing, etc., usually don't have any sales tax on it. Primarily luxury goods or goods that aren't necessary for survival are sales taxed. Areas with more tourists gain a lot of revenue from this because of people coming from other areas contributing to their state revenue. Next method, the value-added tax, or the VAT tax. Kind of a sales tax, except it's at each stage of production. Basically, during production, the product is taxed based on the value added to the product at each stage. The burden ultimately falls on the final consumer. Because of this, low-income, working-class people bear most of the burden because the wealthiest individuals don't actually consume as much as lower-income people. This is called the velocity of money. If you give money to lower-income people, they typically are more efficient at spending it rather than the wealthiest individuals. Areas with more tourists typically gain a lot of revenue from this as well, similar to the sales tax.
We can also have property and asset taxes.
Property taxes are basically paying rent to the government because land is ultimately owned by the government. The wealthiest individuals typically have most of their value from assets. People say, we can't tax that, we can't tax that. Yes, you can. Property is also an asset. The wealthiest individuals don't get their wealth from their income, but from holding assets on the market. You can tax assets similar to property taxes. They'll complain, no, we can't afford the taxes on our assets. Well, then you got to be like a normal person and sell your assets in order to pay the tax, just like every other citizen. We shouldn't be putting these wealthiest individuals on a pedestal. Everybody in society needs to be treated the same, and they need to pay their fair share in taxes. The next method, first, that I'll speak about income taxation, is a flat tax. This flat tax is effectively a tax break for the wealthiest. Let me explain. Assuming the cost of living, shelter, food, utilities, etc. are the same within an area, the wealthiest would have far more to get by and the lowest incomes will have far less. You might ask, why is that the case? Okay, let me give you an example. Let's say the cost of living in an area is $600 for the year. Yeah, I know that's really, really low, but I'm doing it for simplistic purposes. Let's say the flat tax is 10%. There's a low-income earner making $1,000 a year, so after a 10% tax, they would have $900. The high-income earner makes $10,000 a year, and they'll have $9,000 after taxes. Low-income worker, after spending the cost of living of $600 per year, would just have $300 for any other expenses, while the wealthier person would have $8,400 to spend. Even if adjusted for the higher rent for higher income, which wealthier individuals usually have apartments or mortgages that are higher than lower income individuals. Let's say it's $1,600. The wealthier individual is going to have $7,400 for other expenses, which would be 74% of their income. The low income would only have 30% of their income. As you can see, based on this simple explanation, wealthier individuals would benefit far more from flat taxes than low-income individuals, which are typically the ones that need our help as a society. On to another method to tax income. So progressive taxation. This works by having tax brackets based on income. The tax brackets have a range of income. It is taxed on that specific range. So say I create tax brackets with the following ranges. I want to stress again, you are only taxed the percentage on the income within each bracket. So let's go back to our low-income worker and high-income worker. The low-income worker would be paying approximately $70. This should leave $930 after taxation and $330 after paying the fixed costs for the area. Their effective tax rate would be 7%. The high-income earner would end up paying $1,970 in taxes. This would leave them with $8,030 after taxation and $7,430 after paying the fixed costs for the area. Their effective tax rate would be 19.7%. This would leave them with significantly more money than the low-income worker. Higher income earners are paying higher taxes because they can afford to contribute more. Also, higher income earners' income is likely as a result of more use of public goods and services taxation pays for, like public roads, infrastructures, subsidies, etc. They would just be paying their fair share in taxes because a very large portion of their wealth is built upon public goods and services. Low-income earners continue to not have much money for much else, so supportive government programs can be implemented to help them and take care of one another. Within progressive taxation, there's marginal tax rates. These marginal tax rates are the tax rates for each tax bracket. However, the top marginal tax rate is the tax rate for the top tax bracket. Yes, that taxation number looks very high, but the effective tax rate would be far less than that. Look to the example. We have a top marginal tax rate of 30%, but the effective tax rate is only 19.7%. So let's go into a little history of the top marginal tax rate. Prior to the Great Depression, our elected leaders thought it'd be a good idea to drastically reduce that top marginal tax rate. Funnily enough, this is the only time that cutting taxes has led to increased tax revenue. Now, you might think, oh, that's a great thing. Some people still use it to this day as a bad faith example. However, most historians believe less money was hitting for tax evasion, which is why the tax revenue went up after this. Tax revenue does not go up when you cut taxes. It's simple math. It doesn't make any sense otherwise. The top marginal tax rate during the Eisenhower administration was roughly 90%. The threshold for that marginal tax rate was roughly $400,000 for a married couple and $200,000 for an individual. This means anything more than $200,000 for an individual or $400,000 for a joint filing would be taxed at 90%. Again, that is not their entire income taxed at 90%. It's everything above that threshold. The cuts over the last couple decades has led to tremendous wealth inequality amongst residents of the United States. The wealth inequality is very similar to what we were seeing during the Great Depression, and things are not good for the working class people here. Tax revenue is used to help all of us as a society. If we continue to remove tax revenue generation, we will not be able to take care of others, and we will continue to have people die of things that we shouldn't be dying from in 2023. For example, the high maternal mortality rate, the high infant mortality rate within the United States, the amount of people that are dying from lack of health care, the amount of people that are dying from starvation, the 500,000 people that don't have a roof over their head. This doesn't make any sense in this society where we're the richest country the world has ever seen, but we can't take care of our own people. Do not listen to people's bullshit that billionaires and corporations shouldn't be taxed. They put more strain on public infrastructure and public goods and services than we ever do. So why are we the ones that are footing the bill for it? They need to pay their fair share. What do you call a fairly taxed multi-billionaire? A multi-billionaire. We need to have a better America for all of us, not just the wealthiest people in the country. Do your part, vote for representatives that understand this and will fairly tax the billionaires so we can help the most marginalized amongst us.